I do think the economy needs to have some sort of a downturn. I think it's already starting to arrive.
Does the US-Iran ceasefire agreement take some pressure off the RBA to address again ongoing high inflation with an interest rate hike?
Well, it's a good story, isn't it? If the Strait of Hormuz is reopened over time and we head back to some semblance of normal in terms of that trading flow, and that's going to help free up what is a supply constraint at the moment, I think we have to be really cautious that, this is one step in a process, that it's going to take time to reopen. There's a lot of disruption that's happened. We've got fertiliser that hasn't gotten out there for 3 months, and so a lot of agricultural yields are likely to be low. There's a whole collection of stories that I think still have to play out yet. But I think the RBA will look at this certainly as positive news that we're heading towards some semblance of normal.
Even before the news was announced, you had said that you expect the RBA's next move will be down. Why? When inflation continues to be above the target?
Well, we still have an inflation challenge. And I think the RBA is still going to note that. They're going to note that inflation's too high, this is the primary focus and so on. But at the same time, I think over the last little while, the last couple of months, we've seen some really clear signs that growth is weakening quite quickly in the economy. And GDP in the first quarter was weaker than expected. And then the range of partials where business confidence has fallen, consumer sentiments at a low level. We've seen household spending fall in April, employment fall in April, the unemployment rate rise to a 4.5-year high in April, auction clearance rates are declining, house prices are declining. There's a lot of indicators that tell us that we slowed down in the first quarter and growth probably weakens even further into the second quarter. So I think with that, the RBA is unlikely to be convinced that they'll have to lift interest rates any further from here. Firmly on hold this week, and then we think that this is the peak. So the next move we think is down, but not for some time. I mean, this is the key difference between this and previous cycles. All those things can weaken, but we've still got an inflation challenge, so the RBA has to sit still for an extended period while it puts downward pressure on the economy.
You are painting quite a negative picture of some key economic indicators. You've warned before of the potential this year for recession. Are we likely to see it?
Well, we think our central case is that we are in a downturn in the second quarter, that actually GDP will end up contracting in the second quarter of this year. But as we've talked about just then, if we make progress globally, if the Strait of Hormuz reopens, some of the pressures come off, that's the sort of thing that we're factoring into our forecasts for supporting at least some positive growth into the second half of this year. So we have a downturn, a weakening, almost a needed weakening, actually. I mean, the economy needs to slow down if we're going to get inflation down, but we haven't penciled in a recession as a central case, and that's still the view we carry.
What do you see happening with the jobless rate?
We think the unemployment rate continues to gradually trend higher. We've got it rising to 5% by the early part of next year. So that would be higher than we've been for quite a while, and it is an upward trend in the unemployment rate. But our view is that the economy needs to have a period where the unemployment rate is above full employment if you're actually going to get inflation to come down in a sustained way. And we think that the slowdown in growth that we've already got underway and that we think will continue over the next few quarters will generate fewer jobs than we've seen in recent times.
If a recession does indeed occur, will it be the recession Australia had to have, or has the federal government's budget changes contributed to slowing the economy quite sharply at the same time that the RBA was trying to put the brakes on with its interest rate rises?
Well, I think there are two parts to that. I mean, the first one is I do think the economy needs to have some sort of a downturn. I think it's already starting to arrive. I've been on this program a few times in the last couple of months saying it's already arriving in March. We could see signs of it already, and I think we're pretty clear that that's what's already happening. And yes, I think it does have to happen. I don't think you can keep growing at the rates we were through last year and even into the sort of year rate for the first quarter of this year, and think that that inflation will come back down to the Reserve Bank's target. So there's no other real way to get inflation down fast enough at this point. And then in terms of what the budget's done, I think the budget has shaken confidence a bit, and I think it's also got a very clear design feature, which is to try to put downward pressure on house prices to improve housing affordability. The removal of the negative gearing and the CGT discount for existing dwellings, amongst other things, is designed to improve housing, and it's doing that. It's seeing house prices fall. We've seen auction clearance rates come down, and so I think that is going to take a bit of the strength out of the economy, the momentum out of the economy as well.
Is the Assistant Minister, Daniel Molino, right when he says many bank chief economists believe the tax changes will remove distortions from the system? Are you in that camp?
I think so. I think we can say that the design of the tax changes will help to remove some of the distortions in the housing space. So that very clearly in the housing space.
What about in the business and investment space?
Well, I think it's more of an open question. The fact that the CGT discount was removed from the whole collection of assets is going to reshape what goes on in the business sector, and I think there's a question as to how that's going to play out. And I think more broadly, I would say the budget looked at those sorts of tax changes, but I think there are a whole bunch of other things that could have been done to make the tax system more efficient. So things like looking at the GST, looking at lowering the personal income tax rates, looking at lowering corporate tax rates. And there were broader things that could have been done as well on the regulatory environment and competition that if they'd done in bigger scale, would really focus on the bigger problem we have. The bigger problem we have is weak productivity growth in Australia.
On that, the Treasurer, Jim Chalmers, continues to talk about the boom in business investment. But is it a good thing for the economy if that growth in investment is based solely or largely around data centres, particularly if the dividends aren't felt here, they flow overseas?
Well, I think, again, the question is, we're building a lot of data centres right now. This, in principle, is a good story. It's going to add to the capital stock. But the key question is going to be how quickly do businesses find a way to apply the technology, the AI that comes off the back of these data centres to actually improving their processes, lowering their cost base, improving their productivity. And if that's where we go and businesses move faster and start using that technology in that sort of way, I think that's a positive thing for productivity growth. I think that looks like a clear way that we're going to see some improvements.
Is it clear, though, that we're going to be able to do that here in the short to medium term?
Well, that's the question, and I don't know. I mean, I really don't know the answer to that. I think what we can say at the moment is we've been quite slow on the uptake in terms of using AI broadly in the business level, but it may very well be that businesses, given the availability of it, given we're building lots of data centres, will start to do that more quickly. I think that is about the main thing that I'm looking at that potentially lifts our productivity over time, because I don't see that there's been that much policy action that's been pointed in that direction. So if that's the case, if we can get that to happen, we can improve productivity by applying AI and technology, then we might be able to grow a bit faster than we've been growing in recent times, more sustainably.
Paul Bloxham, thank you.
Thank you.